Moving on to oil prices and gas prices. This is important to everybody. They're holding steady this morning after logging their strongest week of the year on increasing optimism that major producers will keep their output capped in the second half of the year. Joining us now to weigh in on what we can expect, Chief Oil Analyst at the Oil Price Information Service, Tom Kloza, who knows more about oil and gasoline than anybody walking on, well, in the U.S. Tom, what can you expect from oil prices in the next 3 months in the second quarter?
It will be nothing like the previous 3 months. This is the quarter where they get juiced up and they take off. Unbeknownst to most people, the wholesale prices have rallied by about 15 to 30 cents a gallon in the last 10 days. This is a quarter which traditionally brings increases of 15, 20, 25 cents a gallon for gasoline. I think you're going to see it in April. You'll probably see it in May. We won't go out to June at this point. But you will see prices go to the highest numbers you've seen since probably August 2015. It's not apocalyptic. You can afford it. But everybody will be talking about the highest price. And so remember when I could get 10 gallons for $20? That'll seem like ancient history.
Tom, the main question here is we've seen oil really stabilize around the $50 level. Can we ever see the $60, $70 level, given that you're even seeing the majors try to do horizontal fracking in deep water? Everybody's trying to become more and more efficient. We're seeing people in the Permian Basin pull out oil in the $29 range. So can we even see oil ever rebound to those two levels above 60, above 70?
I think above 70 is tough. I would look at it almost like I'd look at home run totals in the Major League Baseball. That's about as much as we've got to get to in terms of crude oil prices. So if you have everything come together for the right year, you could see some prices in the 60s. But you're right in that the break-evens have come down for the shale producers in particular. There's some shale producers that are making a lot of money at $30 and $35 a barrel. And, of course, the Middle East oil, which has been sort of restrained here in the last 100 days or so, there's a lot of that can be brought to the surface for less than $10 a barrel. But I think that there's a sweet spot, and the sweet spot is around 55, 57 or so. And we were too low when we dropped into the 40s. I mean, we can drop into the 40s again or to the 30s again if we have a recession. But instead of that, you've got more people driving than ever. You've got brisk car sales. You've got people opting for SUVs as opposed to the real, the Priuses and so forth. And you've got the best outlook on the economy. I mean, consumer confidence is as high as it's been in 16 years. We may disagree as to why those things are all happening, but they point to higher prices in the second quarter.
Amen, Tom.
Yeah, hey, Tom, this is Mike Block. You know, a lot of what you're saying about confidence, a lot of people are optimistic in the economy. It doesn't quite jive with being bearish on oil. But just thinking about outside the U.S. now, I think there's been pleasant surprise about how OPEC and the non-OPEC producers have stuck to the production deal. How do you think that evolves going forward? We're hearing about how they may extend these production cuts. And how much do you think the Saudis are looking to really keep oil stable so that the Aramco IPO goes off nicely?
Well, I think the Saudis have more than the usual interest in keeping prices stable, and I think that the Saudis have actually overcut. In other words, they're cutting more, along with perhaps Kuwait and the United Emirates. They're cutting more than promised. Now, will they do that after the supply agreement runs out at the end of June? They'll probably put in an extension, but there'll be a little bit more cheating. The thing that the market's got going for us is with GDP about where it is. We're looking at 1.5 million barrels a day of annual global growth for oil. That's a pretty good number, and that means that in this quarter, and we've got hundreds of billions of barrels of too much oil, we're probably going to draw down about 35 or 45 million barrels of oil from those big gelatinous reserves. And we'll draw some oil at the end of the year. So it took a long time to build up this tremendous glut. But we are going to see that glut sort of unwind just a little bit in the remainder of 2017.
Tom, great to see you, as always. Take care of yourself. Tom Kloza, come back soon.
Thanks, Tegan.